I ended yesterday's video doubting this ugly double bottom and bullish setup we had. I said this feels like a trap, feels like a bull trap, and it was. In the morning we did see a big decline, but as you can see the daily candle is green. So let's talk about what happened today. You can see that this pink or fuchsia zone, once again, acting as support. Look at volume, it's pretty low. Honestly, volume is very, very low there. Looks like I was charting on a different time frame. You can see that the implied volatility did move down. RSI did come up a little bit. It's pretty much flat. It's below 50. It doesn't necessarily look bullish to me. This doesn't look like bullish reversal. It really doesn't. We do have a green candle here. I think that these series of candles, these 6 candles, look a lot like these candles back here. Oh, and there's 6 of these too. Huh. Interesting. I remember that I got wrecked back here. I was holding puts, and then I got lucky when implied volatility ticked up on these 2 red days. I was able to recover and make profits. And today I entered in some puts, and I was doing pretty well. In the early morning, I traded a couple of puts really well, and then I decided just to kind of go all in. I don't know why I do that, but I do. This is why I lose money in the markets. Nonetheless, I think that we're for a similar scenario where here we had this level of horizontal congestion. I think we're seeing that same occurrence here, and when the price does break down below that 1450 level, that the fall will be pretty sharp. Maybe we have another big red day like this. Call these long black days. That is what I want to see, and I want to see it span this entire gap, or it's not a gap, but this entire field. I want to go all the way down here, and that's really what I'm going to need in order to make money on the puts I have. Today was definitely a gut check, absolutely a gut check. Let's zoom in onto the 15-minute time frame. Let's have a look at what's going on the last couple of days. All right, so here's the incoming downtrend. You can see it very clearly. There was a breakout, and this was an ugly double bottom here, right? But what's this? This is like a double top, right? But like an ugly double top. Ugly because it's not, these peaks aren't at the same price level. They're a little different. You can see that today's close was actually pretty much at that second level right there. That's not bullish. That's bearish. So essentially what we've had is we've had a couple of rejections going down further below 1450, and the resulting pushes higher are not setting higher highs. This is a lower high. Yep, lower high. That's a lower high. So whether or not we see the price break up to the upside and close and confirm a move above $16 is really the question. That is the same, is that as true as it was yesterday as it is now. We need to see a confirming move higher before we can say bullish reversal. Otherwise, this just looks like it's just waffling between 2 levels. And you know, now that I'm even looking at this a little more harshly, I'm thinking to myself, well, I guess that's not really bearish divergence, is it? But the RSI is coming down with the price. That makes sense. If there was bearish divergence there, that'd be great. There's not. Nonetheless, you can see that volume did pick up towards the end of the day at that rejection at that level. And back here, that happened as well. Right here, I was thinking short interest probably increased. And that may be true here as well. So let's go ahead and zoom in and talk about what happened today. I got, well, I'm still holding a lot of open positions, and my positions are not doing super great. Let me go auto arrange and auto zoom and turn on my day trading chart, which is right here. Yeah, that's gonna be a little messy. Let me zoom that in. So let's talk about this. As soon as I saw these opening candles, I said, this thing is not looking, this is the wrong day. Let's go over here. Oh, that was today. Yeah, interesting, I didn't recognize the open immediately. I saw this open, and this was just a closing gap, and that makes sense. And then this failure to rise above 1538, this was really, really bearish. And so I entered into a put right here. And no, I'm sorry. There's the put I entered, right there. May 6th, $15 put, and I sold it right down here. And there's a lot of trends coming and colliding here. You have this incoming downtrend, you have this corrective uptrend, and then we had this scallop setting up, we had this little double top in here, and I entered into another put here, and I think I held this one. What was this one? Another $15 put, and I exit here. Oh man. Yeah, that was awesome. I had a great morning. You can see I entered at the very top of this measured move down, bought right back into the end of the corrective phase right down here, and then sold out towards the bottom of that move. Excellent work. And then I said, you know what, it looks like this thing's gonna go down further, entered into another put, and then we start this corrective phase, which was really annoying, and there was a lot of tests of this $15 level, and as the price just grinded sideways, my contracts are deteriorating in value, and there's like this weird almost pennant or a channel. I didn't know what to think of it, but I said to myself, it's likely that we're going to see a big move once the Fed starts talking, which happens here. You can see that. And even right before the Fed, or I should say Powell, started to make, well, when the meeting notes came out, these were the minutes preceding the notes being released from the FOMC meeting last month. And you can just see that. And this was a big move, and then boom, boom, boom. I was feeling really good down here. I was like, yeah, this is it. We're going to go down. We're going to go down. And then get wrecked, Cap. Your puts are toast. Yeah, that was pretty harsh. And so I started looking for this divergence in the RSI, and sure enough, we got it. The price rising as the RSI was setting lower highs, but the price continued to rise and it stayed up there. You look at this. This is really weird. It started to come down towards the end of the day. I haven't really looked at this. At some point, I think it was right here, I just said, I'm gonna go. I'm just gonna like sit this out. I could have taken losses much earlier in the day, and I think that was back here. And if you're in my Discord, you know I said that. I was like, if I was going to exit my positions at a loss, I would do that here. At that point in time, I think it would have been down like $35, which would have been a pretty acceptable loss. It's not great, but I'd made 17 earlier today, and I have these other gains from earlier in the week. It would have been like a wash, but I decided to hold because, you know, I called the bull trap, right, didn't I? And shouldn't the big dump follow? But I think we're getting another fake out. I really do. I think this is another fake out. And if it's not another fake out, I'm gonna get totally wrecked. Totally wrecked. And it makes me want to just like forget about the day trading, because I don't need to be doing this. I really don't. But you know, I said I'd go until I ran out of money, so maybe this just expedites that process. Nonetheless, I think that going into tomorrow, the open could be very strong. And again, that 1538 level, if the price moves below that 1538 level, that's going to be really bearish. And I really hope that we do see that. I'm going to need 2 days of rising implied volatility and $2 drops in the price to be able to recover or make a profit from the contracts I'm currently holding. They're trash puts, so they expire this Friday, and they're all out of the money. So it's going to be interesting, probably a little painful, but that is perfectly okay. I'm going to turn on after hours here, see what's going on. I haven't looked at after hours yet. Looks like the price left off a little bit, you know, whatever, it's after hours. I don't like to put too much attention into that. It doesn't matter much. So moving into tomorrow, it's really all about, I mean, look at this thing. This looks like an ascending scallop. If this breaks out to the upside, the price target's going to be pretty high, right? And we're going to move towards $17. That would be a clean ABC corrective move upward or a measured move up. You know, I would just take, you know, Bukowski's going to have a percentage mean price target of the height of that pattern that you apply, but you know, best case scenario is up towards 1650 just from that one pattern. Again, I wouldn't count on it, not yet. Again, we didn't set a higher high from yesterday, so that's not bullish. It looks like the corrective uptrend is holding, which is really good. We didn't, however, set a new high, so that trend doesn't move. So going into tomorrow, if the price can move below that dashed line, that's going to be bearish. And this downtrend is effectively broken. That is effectively broken. So again, this reminds me of the last time we saw the rectangle break down. We had this weird corrective phase. I was getting wrecked on my puts, and then kaboom, the price dumped. So moving into Thursday and Friday, that's what I'm looking for. And happy trading.